All right. I hope everyone's having a nice weekend. I am doing a market update. We're going to be looking at just a few things today, looking at the Nasdaq 100 on a 1 month time frame to level set the rest of the analysis, right? And the rest of the assumptions. Going back for those of you that have followed me for a very, very long time, I get accused very often of being a perma bull. And there's a reason for that. There's a reason for that, and I'm going to share that with you right now. There most certainly will be a time to get cautious. I don't know when that time is. I'm going to attempt to try to illustrate things that I would be looking for, but we really need to zoom out when we do that and be ready for the least expected, which in my mind right now is one of the greatest runs we've seen since 1998, folks. 1998. And this oval, excuse me, kind of illustrates what happened in risk assets. Bitcoin was obviously not around back then. So when I think we're somewhere, like in this range in terms of traditional finance, now you might understand why I don't mess around with too many downside projections on Bitcoin. I don't care, right? It doesn't matter to me. We are in what I believe is, and again, I'm not a financial advisor. I could be wrong. Everything I talk about could go up, it could go down, it could go sideways. There's always those three options. But I have my convictions, and that's what I'm here to present, right? Good, bad, ugly, right, wrong, doesn't matter. Doesn't matter. And so where I want us to kind of keep our minds in tune to is, the structure that's unfolding right now being very, very similar to what we would potentially see later cycle of a parabolic type of movement, right? And here's this, we've all seen this parabolic curve pattern, right? You got the price moves the slowest at first, and as time goes by, it accelerates, and the appreciation in price comes at the same time with a reduction in time, and that's what a parabola is. And so this is the environment. This is the risk asset environment I believe we've been in for a while. And when everyone was shouting back in 2022, we're starting a bear market, the evidence just wasn't there. Why wasn't it there? Well, if we're going back on the Nasdaq, this is a monthly chart. I've got a 50-month simple moving average in red. Okay, that's what you see right here. And there's things that happen on the high time frame on a monthly that would indicate a potential start of a bear market. A very quick reclaim on a monthly time frame of that 50 indicates V-shaped recovery. Okay, we saw it there. What do we have here? We had just a knife through, didn't even undercut retest. This is in 2001. That was the start of, and a rejection, right? Rejection right here on 70 on the month. So that was the start of, this is the start of basically a secular bear market, right? So 2001, prices didn't get back to that level for 6 years, but then, that was just a B correction, right? B, C, and then didn't truly get back and up and over that level until 2011. So that's 11 years. That's what a secular bear market looks like. Bitcoin has never been through that, right? Bitcoin was born in that area. Out of the great financial crisis, Bitcoin was born. And we are now coming to, close to the conclusion, and I don't even know what the conclusion is, right? I mean, this is me speculating that this conclusion could be 6 months, could be 4 years, could be 5 years. I think we're all going to be wrong in trying to time this, myself included. We're just not good enough, right? Markets can stay irrational to the long side much further than people think. Classic example is here, right? So we had coming back to 2000 and in the 2000s, we had this parabolic, right? We got 1 touch, 2 touch, kind of 3 touch, 4. And well, you know, what did it do after that 4th touch? It went from 1,000 to 4,000 range in less than 2 years, a 4x in an indice. That's this, you know, who could have projected that, right? That's market staying irrational to the long side, far greater than people can imagine. And when we look at relative strength, coming into this 70 on a monthly time frame and greatly exceeding it tells us a lot about the character of the market. Okay, we did that back in 1995 and then just kind of consolidated around this overbought region. Okay, and then finally broke out of it, and then, you know, that was kind of the blow off rejection. And so I'll be looking to strength to maybe give me some clues, because that's it. That's the only way I know how to do this. I'll be looking to strength to give me some clues, as well as what the reaction is at this 50-month, way down the line. And that'll be, you know, that'll be late, right? Because think about this for a second. 4,000, it broke, you know, at 2,000, 50% haircut, and then went down another, what, 60, 70, 80%. So that's not even necessarily that reliable. It's more reliable in my mind in terms of what's to come, you know, when you get a V-shaped recovery, which is what we saw here, right? Into it, very, very quick reclaim, and then out of it, V-shape. And that's one of the things that gave me confidence to put on one of my largest, you know, long positions back in this area. The S&P actually didn't breach it, and so that's what I used. If I was going off of the Nasdaq, you know, I'd probably would have waited a couple of months to get some confirmation on a reclaim, but the S&P didn't breach and looked much cleaner, and so that was my signal. Okay, next. Why is this over here? Hang on. Next is what am I looking at right now? Okay, what are we looking at right now? Well, you know, what I'm looking at is let me get rid of that moving average. What we're looking at is, you know, what's the character of this market going into where we are right now? We had a, you know, first true power move in 2013, right? This is where this energy started. This is what I'm getting at, folks. You know, these things are, for those that are trying to, you know, get in and out of things and make decisions based on price action from a day, a week, a month, like this started back in 2000. The energy and what's happening right now started back in 2013. That's what I'm trying to kind of explain here, right? And so we got a nice move into, you know, overbought on the RSI, then we get back down under, and then boom, back over, consolidation, and same type of pattern, right? Third push, you know, rejection, bottom here, V-shaped, and we just got back into, this is last month, we just got back into overbought. That's akin to potentially this area here in 98, potentially, or even this area early in 98, right? So, you know, maybe something like that. Something like that you could easily make the case the character of what's going on right now is very similar to the character of what happened in this area, which ended up being, right? I mean, this is just a channel, like literally just a channel of crazy volatility. This is a monthly chart, folks. So 900 back down to 787, 1,000 back down to 974, 1,300 down to 1,100. That's 20%, 30%, literally in, you know, a month in July of 1998. A down move. I wasn't investing through this. I graduated in high school in 97. So I had no idea what was going on. But imagine that environment today. That's volatility that preceded that last parabolic move. And so this is the framework at which we, the lens at which everything else that follows is based on. Okay, folks. And so now let's go to Bitcoin, and let me, yeah, most certainly not look at a 4-hour chart, because I'm talking high time frame here. That's the last thing I'll be discussing. Is some speculation, but let's just look at my updated count, and there really isn't much to update from the video that I did last week. Okay, I still see us, and this is a massively bullish. It's been massively bullish. It was massively bullish at 70. It's massively bullish now. I don't know what to say. You know, when I'm looking at where through the lens at which I think we are in the risk market cycle, as I just shared with you, 70, 60, 50, the lower it goes, the more bullish it is. You know, my targets are conservatively, you know, over 200,000. These levels, just that they're not that worrying. I just shared an example where the Nasdaq in 1998 went down 25% in the span of 2 months. The Nasdaq, folks, the Nasdaq. Okay, Bitcoin just went down. What did we go down? Peak to trough around 27, 28%, something in that region. Okay. And if we're being honest with ourselves, the drawdowns have not been that dramatic in this bull market. They just haven't, right? We had a flat correction, right? Flat correction here. Okay. We had what I'm claiming is a zigzag. This isn't like fact, folks, right? This is the facts emerge after the fact. This is what I believe is going on. So flat correction, very muted, and then, you know, our first kind of zigzag ABC was what it's looking like right now to me. And the key, as I mentioned last week, is how quickly we reclaim the 30-week simple moving average. Why did I say that last week? Because there's just evidence to show it's an important level, right? Back in March 2022, right? Rejection. And I think this is when was it? Was it 2020? It was 2022. I think Do Kwon was purchasing in this area. And I was on a space a couple days ago. Dots brought this up as a great point. Really makes a lot of great points on, and it was a Chimp Zoo space, who I have a lot of respect for as well. Made a point that we were in a downtrend here, okay? And you had a forced buyer announcing buys to the market. And folks, I believe it was this area. And that had a great impact on price, didn't it? A lot of people front ran that. And so price went from, you know, the lows in this area, it went up 40%. Wow, I didn't realize that. 47%. So, you know, bull market's back, right? Well, no, this was in a starting of a downtrend. It wasn't obvious at the time, wasn't obvious to me. I've learned a lot over the last few years. And if I had this 30-week up back then and saw this rejection, I would have now, knowing what I know now, would have been much more cautious. Anyway, the point is you had a forced buyer. And why I bring this up is Germany, we had a forced seller, okay? We have forced seller in an uptrend. Oh, forced seller in an uptrend, forced buyer in a downtrend. What did it do? Temporarily had an impact on the price, okay? ABC, and then resumption, downtrend. Resumption of the downtrend. And really the most explosive leg of the downtrend, right? That's the most explosive leg of the downtrend. That's the 2 to 3 movement, right? And so what do we have here, folks? We have, I'm gonna get out of here. We had a forced seller, okay? And you want to see that towards the end. That's what I like to see in the context of an uptrend. And so the base assumption here is resumption of the uptrend. The question is just when, and that's the hardest one to answer. I still think the lows are in. I think the 30-week simple moving average is sitting at 58,570 or 80. Okay, we're below it right now, trying to make a move, negotiating with it right now. And depending on how long that takes is going to indicate the highest probability of a V-shaped recovery. And again, we've got several examples of that. Okay, March 2023. Here's an example of right under 1, 2. Tried to get over it the last week of August, no go. Okay, 3, 4, 5, 6. Close right at it September, but not decisive. Right, you want to see power. Not decisive, negotiation, then power 1, power 2, and that kicked it off. Okay, that's what I'm looking for here. I'm looking for power through this area. I'm looking for no retest. Okay, no retest. The market doesn't reward people for waiting, in my opinion, for levels that everybody wants. The level everybody wants, if we're just being, let me do something. Let me do an exercise here. Remember this area back in the summer? Okay. Everybody wanted what level? They wanted this 30K, 31K retest and go. It didn't come. The market doesn't reward those that say let's see it play out and then get the safe entry. If this happens, like I think it's going to happen, or it's just going to go, in my opinion, we're going to 85, 87, 88, 89,000 in a couple weekly candles, 3 maybe. I think I just don't think this market rewards has been rewarding people that are on the sidelines or that are high time frame bearish. Just don't. I could be wrong. We're gonna see. Oh no. Yes. Actually no. Let me just do some low time frame what I'm looking at, because I think there's, I don't know, maybe there's value in this. Let's see. The low time frame speculation. Low time frame speculation. Where's my low time frame speculation chart, folks? I got charts for everything, as you can kind of see here. All right, here it is. Low time frame speculation. We got to take this with a grain of salt, folks, because Bitcoin is a low time frame is attempting to fool the most amount of people. That's what it's trying to do. So when a chart looks bearish on the low time frame, that's the market makers are, in my opinion, trying to instill this into market participants, right? Go back to that Nasdaq chart. Go back to the examples I gave you of the volatility. Volatility is the way that price expresses itself in the form of energy to both the downside and the upside, and it's needed for both directions, folks. It's needed for both directions. And so if I'm objectively looking at this from a trader's perspective, you see both sides of the coin. I can see both sides of the coin, right? We've got, let me move that up there. I'm sorry. We've got, and this is a 4-hour chart. Let me just throw the daily up really quickly. We'll start there. I can see both sides of low time frame coin, but I just don't care, because this is exactly, if you're a bull and you're holding spot and you've got some conviction, this is exactly what you want to see, because this is how the market sheds the weakest participants. We have a range. Right, we've got a very well-defined range, okay? We got a very well-defined range. Okay, we've got a first kind of touch for the range low, range high, another touch here, breach through it. We've reclaimed this key zone, right? That May low, we've reclaimed it. And, we've got multiple touches now. So this can be 56,614 can be a valid interpretation of the bottom end of the range, because we've got 3 touches. And so that's what we have. We got a reclaim of the bottom end of the range. Now, what are the bears looking at? I'll tell you exactly what the bears are looking at. Here's what they're looking at. This is what I think, again, where the market makers rule the low time frame is they're looking at this. They're looking at this downtrend. They're saying, okay, this is pretty well defined downtrend, right? Downtrend. This area is resistance on a diagonal, but most importantly, You know, diagonal is less important than the horizontal, right? This green box right there. Two rejections, 1, 2 rejections, right? Everyone yesterday, I posted this was it last night? Everyone thought, oh, we're going down, right? We're going down. Why didn't it go down? Nasdaq was down 2 days ago, was down what? Almost 2%. What I like about these formations, and this is kind of a joke, but it's not, because these dragon formations, they're not, I don't know what the reliability is, to be honest with you, but this is exactly what you kind of would see in these, right? You got a dragon, leg, tail, right? That's a dragon tail. And then you got the dragon hump and you got the dragon head, okay? That's what you kind of see with these, right? You lulls the market participants into that potentially shorting, and that tail again. That's this. It's not saying this is going to happen. That's my interpretation right now. I think these lows are in. I think these lows are in. You know, could we be doing like a 1, 2, 3, 4, 5? You know, for our 1, and then A, B, C, and then impulse out. Sure. Until that weekly is reclaimed with power, I'm just not going to call fresh impulse, because the last time I was wrong, and so I kind of relinquished that in my mind. I'm going to reserve judgment until we see a powerful reclaim. So that's what I'm looking at on the low time frame, folks. We shall see what's next. Let's go to Mara. Let's go to Mara. I want to do I want to use this for the proxy for the big three. Okay. I've been covering WAGMI a lot lately, as to kind of encompass the general sector and the AI plays and the traditional miners. But now I think it's time. I think it's time for rotation, the market to rotate, not me to rotate. Okay. This is a weekly chart of Mara. And let's throw up the 30-week moving average. This one has been very frustrating, but if you're long-term, again, this is what you want to see. This is what you want to see. I've got the 30-week moving average up here, folks. 30-week, okay? 30-week is sloping up. This weekly close, look at that candle close on the weekly. Right? Look at that beautiful candle. We reclaimed the 30. Very bullish candle. After 1, 2, 3, 4, 5 weeks of price action under it, we've got to reclaim. The key is going to be to see if we get the follow through next week, and I'll go back to the low time frame on this, and this just bodes well for the entire mining sector and names like CleanSpark and Riot that have been lagging. Now, objectively speaking, this count is looking great. It really is looking great. It just hasn't happened in the time frame that we wanted, right? But what also hasn't happened? Actually, let me get rid of that for a second. What hasn't happened? So Bitcoin, let's just do it this way. So Mara, since its lows, is up 47%, folks, since the April lows. What's Bitcoin up since 52 or 3? You get where I'm going here? What, 15%? So even the lagging traditional miners have been outperforming. It just doesn't feel like it. It just doesn't feel like it. And what we have here on a larger time frame is a massively bullish sign of strength, right? For those of you that follow me in my Wyckoff charts, we have a massive accumulation base. Love to see that multi-year accumulation spring, right? Flush out the last of the market participants. It's over. And then rip it back into the bottom end of that accumulation range. Last point of support. Boom, last point of support. And then break out of this range. And then consolidation, sign of strength, back to the last point of support. Now, the key here is what's the most critical region going back to 2022? It's this region, This is the difference between Mara being accumulated and Mara breaking out of accumulation. And there hasn't been any acceptance really below this green area. So we had 1 week, 2 weeks, 3 weeks out of the last 6.5 months. That's not acceptance on the high time frame. The acceptance here has been above that area, right? That's the area has been just bought up. And if I go to, let's just kind of anchor the volume. This is a fun one I like to do. Anchor the volume profile from the lows of October. And what do we see here? Well, first off, we see a reclaim of the point of control, which is where the most volume has traded in Mara since October. At what price level is this? $20.05. Okay. So we got our first weekly close above it in 1, 2, 3, 4, 5, 6 weeks. 6 weeks going back to May. And that May was that what I'm calling the first impulse out of the bottom. So that makes sense. Your first impulsive movement, reclaim the point of control. And now let me get rid of that. Actually, no, let's keep that in play. And I'm going to go down to the lower time frame just to evaluate what I'm seeing on a low time frame here on Mara. And so on the low time frame, that this diagonal is still looking good. It's still looking valid, right? We've got the 1 A, B, C, 2, and we've got our first impulse in the form of a diagonal, right? 1, 2, 3, 4, 5, and then A, B, C, A, B, C, B, okay? And then C, and typically with these diagonals, C breaches 4, okay? Typically with a diagonal, you're going to see something like that, but we never got it. We never got it, right? It's somewhere in the area between 2 and 4, which would be, 15 and 16. That never happened. That's a good thing. That's a sign of strength. That buyers stepped in well before you'd expect a corrective move to end. And so again, my bias is that Mara is beginning its next move, and I think we can see something. And with WAGMI, my calls have been actually very accurate for the last couple months. With Mara, they haven't, right? So I posted a chart. Where was it? Coming out of here, that I thought we were, this was the beginning of an impulse that would have us at much higher prices last month. But it is what it is, right? I'm going to give you the good and the bad for those of you that are following me. That's just the way I'm going to do it. All right. Anyway, so from here, I could see this next impulse taking us to the 40s, a little correction, and finally somewhere in that high 40s, low 50s. That's kind of where I'm looking for this big leg. In this big leg, I mean, this is this one for those that aren't involved in Elliott wave. This one has these subdivisions. I'm looking for this 3, right, with these subdivisions to take us to that 50 range. So that's how I'm seeing Mara, folks. That's how I'm seeing the markets in general. Very obviously I'm very bullish. You can tell that until proven otherwise. Have a great weekend. Look forward to doing more of these. Take care.